Okay, so a very, very good morning to all the FP Markets traders. Welcome to another edition of Technical Talk. My name's Aaron Hill, and time is now 7:32 a.m. GMT. I really hope we all had a fantastic weekend. Look, as I'm sure we're all aware, geopolitical tensions between the Ukraine and Russia remain firmly front and center for the financial markets this week again, as traders continue to focus and obviously trade headlines. News clearly remains fluid, and it changes on an hourly basis at the moment. Sadly, the invasion has entered its third week. Look, according to the Financial Times, Russian military launched airstrikes further into Ukraine. The Russian president, Vladimir Putin, has called upon foreign volunteers to join its war to help the residents of Ukraine, a move clearly condemned by the Ukrainian president. Also, I have seen this morning that the Ukraine-Russia talks are set to resume today. The Bank of Russia is also extending its close. It's extending its close of the stock exchange, the Moscow exchange, until Friday this week. You may remember this exchange has been closed since the beginning of the week. So with that being said, developments will not only be defined by what we see on the Ukraine-Russia front, but also from the scheduled risk events or economic data this week for the week ending the 18th of March 2022. Now, as you can see today, we have very little on the calendar to really get excited about. We do have the Eurogroup meetings, which could be something to keep an eye on, but overall we don't have much to really write home about, if you will. But on Tuesday, we do have the RBA minutes to be aware of at 12:30 a.m. GMT. We also have the US PPI, and this is the month-on-month version, and also the core PPI, and this comes in at 12:30 p.m. GMT. Now, Wednesday is really a key day for the economic calendar. Wednesday evening, we have the the Fed meeting. This is at 6 p.m. GMT. We have the Fed meeting with markets now pretty much pricing in a 100% pricing in a 25 basis point hike. So this will be a widely watched event. Also, in addition to this, we have the Fed, as you can see, FOMC economic projections. This is scheduled for 4 times per year. Now, this is a projection that for inflation and economic growth over the next 2 years. And it's also a look at individual FOMC members' interest rate forecasts. Now, on Thursday, we also have the Aussie employment change in unemployment rate at 12:30 a.m. GMT. This is clearly something that will be watched. And following this, midday GMT, we have the BOE taking center stage, which are also widely anticipated to hike rates. As you can see here, the forecast is for a 0.75% interest rate. So they're also widely anticipated to hike rates by 25 basis points. Okay, just moving over to the markets early trade. As you can see, the Euro futures, Euro equity index futures are higher across the board right now, strongly higher in terms of the DAX futures, up by 2.4%. The France's CAC 40 futures are up by 1.5%. The same for the Euro Stoxx 50 futures. FTSE 100 futures nearly up by 1%. So I am expecting a higher open in the European equity cash markets. This is emphasized, I believe, in the US. Yes, it is. US equity index futures is emphasizing this point. Look, we are currently higher across the board. Dow Jones futures nearly up by 1%. S&P 500 futures up by 0.9%. The Nasdaq 100 futures up by 0.7%. Now, just quickly in terms of the major currency markets, we are looking pretty, Aussie dollar is down by 0.7% right now. We will see this on the chart, and the New Zealand dollar is also down by 0.4%. Now, this could be due to the commodities. Let me just quickly check those out. As you can see, the commodities are lower across the board right now. Gold is down by 0.8%, silver 0.9%, copper 1%, and iron ore down by 1%. So in terms of, just really quickly, in terms of where we are in the crypto market, just bear with me. There we go. Just in terms of the crypto market, look, we are pretty much lower right now. Bitcoin is a touch lower at 0.3%. The big one, of course, is Ripple at down by 3.5%. Now, just to be aware, Bitcoin remains below that key 40,000 mark. I will be looking at the Bitcoin chart in just a minute. Now, on that note, let's switch over to the euro dollar. Now, as you can see on the euro dollar, the weekly time frame still points to further weakness. This is the weekly chart here, guys. Still points to further weakness despite channel support entering the fight taken from the low of around 1180-ish, I believe. But we also have Quasimodo support at 0.778 to be aware of. So between this area, we do have some support on the weekly time frame, and this, these are levels that align with the pandemic lows, the March 2020 lows. So despite the trend pointing lower right now, we do have support on the weekly time frame. Look, the downside bias is emphasized on the daily time frame. As you can see, price remains below its 200-day simple moving average and has remained below there since mid-2021. In terms of structure, technical structure on the daily time frame, we are also reacting from this descending support term resistance. Now, guys, this isn't a trend line. This is simply a very basic descending support term resistance. Okay, and couple this with the 38.2%, excuse me, 38.2% Fibonacci retracement at 1075. We did see some resistance step in. Look, before we head lower on in terms in alignment with the trend, we do have to engulf these weekly levels as well as this decision point at 0.788, 0.854 on the daily time frame. Now, of particular note, I do want to highlight on the H1 time frame, we are seeing a potential very short-term double bottom form between just ahead of the 109. Excuse me, the 109 region. Now, if we break above the neckline at this point here, we could be looking at higher prices for now. But look, this is the area I really want to draw your attention to. Now, between this, so look, below here, we have an AB equals CD pattern. As you can see, A, B, C, D, and this terminates around the 0.881 neighborhood. Now, in line with this, we also have a collection of Fibonacci supports. We have the 1.618% Fibonacci expansion at 0.860. We also have two Fibonacci retracements, the 78.6% and the 88.6% Fibonacci retracements, and they come in at 0.874, 0.843. And this forms a support area. Now, the key point I really want to drive home here is if we engulf this 109 handle and we test this area of support, I do anticipate a potential whipsaw scenario. You know, many traders will have their stop loss orders below here. Those traders looking to buy from this round number, they will have stop loss orders below here, and these will be sell orders. These will be sell stop orders. Alongside this, we'll also have, in the event of a break lower, we'll also have breakout sellers entering the fray, and what that will generate is further sell stops. Further sell stops being triggered. So selling momentum will drive price into this area and fill these bids. Hopefully, these bids will be stronger than the sell stop, the downside momentum, and push price higher. But this is a common scenario. We whipsaw below the round number, we take out a ton of traders, and then we come high, and then we drive higher. This is a very, very common setup you can see on charts. Just really quickly on the Aussie dollar, as you can see on the weekly time frame, prime support at 69.68, 72.42 remains front and center. Look, I just want to say a few things regarding the trend. We are lower. the primary trend is considerably lower right now, and this for me is a very, very deep pullback. While there will be some traders that believe this is the beginning of an uptrend, which, you know, it could well be. It's just I'm following the primary trend structure. As you can see, it's a very, very deep pullback that tested the upper limits of the previous highs, nearly tested the upper limits. But look, this I'm not sure how much of a percent this was, but this correction at this point here, following the pandemic lows and the subsequent rally, may not be a dip buying opportunity at this point here. It may simply be a continuation of this larger trend. So if we break this prime support, we are very likely to test the weekly support at 66.73-ish and potentially continue lower for the Aussie dollar. Now, this bearish position is emphasized on the daily time frame. We are below trendline support, trendline resistance, excuse me, and we're also below, now we're below the 200-day simple moving average. Both considered bearish indications. And look, if we continue lower on the Aussie dollar, we could be looking at the decision point at 69, 64, 70, 40. Now, in addition to this, I also want to bring attention to the relative strength index. Now, guys, the relative strength index, or RSI, is a popular gauge of momentum, or the speed of price change. Now, if we do crunch below this 50 center line, this indicates that the average losses are now exceeding average gains, which equates to negative momentum. So this all adds to this bearish viewpoint we're seeing right now. Now onto the H4 time frame. For any harmonic traders, they may have noted this harmonic bat pattern. Look, the PRZ, I have adapted a touch because I've included a few more Fibonacci ratios. But look, if we continue lower, break these lows at 72.40-ish, and overthrow this trend line support. This is the H4 time frame, by the way, guys. If we overthrow this trend line support, we are looking at testing this harmonic bat PRZ. Now, the defining limit for a harmonic bat PRZ is the 88.60, deep 88.6% Fibonacci retracement at 70, I believe that's 71.34, if I'm not mistaken, 71.34, with a 200%. Let me just making sure I've got that right. 200% BC Fibonacci extension, and that comes in around the 71.12-ish region, alongside a 1.272% Fibonacci projection. That now, for many traders here, harmonic traders, they will recognize this as an alternate AB equals CD formation, and all it is an extended D-leg. So in addition to this, as you can see, I have the 61.8% Fibonacci ratio at around the 71.50-ish range. I included this within the PRZ's overall area, and also a Quasimodo support at 71.09. So the actual defining limits of this support is 71.09 and around 71.50. So look, guys, if we break these lows and we rupture this trend line support, I will then be looking at this this harmonic bat PRZ on the H4 time frame. Okay, moving over to the dollar yen. Now, there's some fairly hefty moves being seen in the dollar yen early trade. As you can see, price is up by 0.4% right now. Look, in terms of trend, the primary trend remains higher. As you can see, this is the primary move to the upside, and we have a secondary correction going on at this point here. Now, in terms of within the secondary correction, we remain within an ascending channel. But look, we do have resistances on the weekly time frame at 118.64 to be aware of, and 119.80, 119.77 to be aware of, and this is a 1.618% Fibonacci projection. So do be aware of these resistances on the weekly time frame. Now, in terms of the daily time frame, as you can see here, the ascending triangle did break out to the upside, and this was a strong breakout. This was a breakout of nearly 1%, a near full-bodied bullish candle. And look, guys, we are seeing a continuation higher this morning. which has also brought the RSI into overbought conditions. But look, continuation buying according to this pattern structure is possible, and we could reach as far north as the 120 region. But look, I just want to bring this to your attention on the H4 time frame. We do have resistance being tested, and that's between 118.24 and 117.81. Now, these are two Quasimodo resistances, and this is also complemented by a 1.272% Fibonacci projection at 118.06. But look, although sellers may try to come in from here, I do anticipate a potential break of this area to connect with the weekly resistance, which comes in, as I said, at 118.64. So do be aware of this structure. Now on the pound, just really quickly, I am looking at, this is a bearish picture for me on the pound. The overall trend remains facing lower, as you can see, since 07. And what we're in right now is a secondary correction. And look, we've broken a number of, local supports to the left, and we've also engulfed the double top profit target of around 30.90 last week. So what we did was we completed this double top pattern, and this with 30.90 out of the way, weekly support at 21.79 could subsequently be drawn into the fight. Now, in terms of the daily time frame, further selling is potentially on the cards as well after we broke through the 30.82 support last week, now a resistance. But we do have channel support coming in around the just get that up, around the 29.50-ish region, followed by support at 28.62. So we do have room, we do have scope to push lower. Now, in terms of the H4, we do see a falling wedge in place, and we also see support at 29.65. Now, 29.65 support on the H4 time frame converges closely with the daily channel support. So this could be an area to watch for a potential recovery attempt from buyers should we test this support area here. I'm certainly not saying that this will be enough to break out of the falling wedge, but it may be enough to draw in some buying pressure. Now, quickly on the H1 time frame, we do have price bouncing higher from the forming a mild bottom ahead of the key 130 level. If we test this supply at 31.03, 30.69, I do anticipate some form of selling pressure to enter from here. This is in line with the overall technical picture. As you can see, room to move lower on the weekly, daily, and H4 time frame. So a test of this supply could be something to be aware of, and with follow through downside potentially targeting the 130 region. Given the overall technical picture, I do also anticipate a break lower below the 130 number. Just really quickly on gold, we are testing support. This is the daily time frame at 1959, 1974. Now, if we do hold here, we could potentially be looking at completing the symmetrical triangle formation at 21.05. And this is a profit objective drawn from the base of this symmetrical triangle, extended from the breakout point. Look, if we break below this support, things are not looking good for gold. Then we are likely heading for the 1917 resistance turn support, and potentially even a test of the symmetrical triangle. Okay, finally, just really quickly on gold. Look, on Bitcoin against the US dollar, the primary trend is still higher. I know we've had we actually had a 55% correction during April of 2021, April, May, June of 2021. But we also recently had a major correction of 52% during the later stages of 2021. And look, we've seen Bitcoin really consolidate in 2022 and form. It's not the best pennant formation I've seen, but it is a triangle formation and could form as far, look, pennant patterns, traditionally textbooks say that the formations usually last between 1 to 12 weeks. Now, 1 to 12 weeks is 84 days for 12 weeks. So we could potentially be looking at price consolidating between this pennant formation for a while until mid-April of 2022. Now, if we do get a breakout to the downside, this triggers, this will likely see price overthrow these Quasimodo supports on a daily time frame between 3260, 32117. Now, if that's the case, we will be in a downtrend according to the overall technical structure. I'm not talking about percentage basis here, technical structure. And look, we could be easily heading for a break of the 30,000 region. Now, guys, that's all I have for you this morning. Look, have a wonderful week ahead. Trade safe. And look, any comments or suggestions, please do consider forwarding them to either support@fpmarkets.com or alternatively direct to the research team at Markets Analyst at fpmarkets.com. Again, guys, trade safe. Have a wonderful week. And I'll catch you all again on Monday morning, bright and early. Thank you very much.